Hello, everyone. Depending on whichever part of the world you're tuning in from, I wish you a good morning, good afternoon, and good evening. Well, before we begin, I want to mention that I have a bit of a sore throat today. Please bear with me. You are going to notice that I'm having a crackling sound, and my sound may seem a little bit different during the video. So I will do my best to keep it as clear as possible and engaging despite this temporary challenge. So please bear with me, everyone in the house. So on this note, I welcome you all to yet another promising session on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where we shall be delving into the financial market using simple but powerful parameters such as trend lines, key levels, and of course chart patterns to identify potential trading opportunities today. Well, before we kickstart the session, let's confirm that we are good to go this morning. So if you can see my screen and you can hear my voice clearly, please type in hi in the comment section. This will give me a confirmation that we are good to go this morning. So I would like to see some feedback, please. If you can see my screen and you can hear my voice, let me know in the comment section that we are good to go. So feedback, please. If you can see my screen and you can hear my voice, let me know in the comment section that we are good to go. Okay, so let's see what we have here this morning. All right, I can see a handful of comments right here. 3174, Sarge 82. I can see me 15626. 2068. I can see 6422, 6627, and I can see Carrie too. Carrie, good morning to you too. Glad to have you guys all around this morning. So I will take this as a positive feedback that we are good to go this morning. For those who are joining us for the first time, you are highly welcome on board. And what we simply do here is to come together as a community in anticipation of both the New York trading session. And while we gather here, we try to position ourselves ahead of the New York session by identifying tradable setups, simple technical parameters that we use to guide our trading activity. So with that being said here, let's dive right into the business. And as usual, the first thing we are going to be doing today is to check on the economic calendar. As we all know, these fundamental factors often manifest on the chart in technical patterns and price movements. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns. Now, today being the first trading day of the week, one peculiarity about today is that it is also going to be serving as the last trading day for the month of July. And we all know that from a psychological standpoint, when it comes to last trading day of the week, month, or year, there is always this psychological expectation that majority of the key players who have held a significant amount of position during the course of the week will want to be closing in, taking off some of their profits ahead of the new month. And with this situation, there is a likelihood of us seeing reversal setups on the chart that will give us a clue of profit-taking activities going on. So while we review the current market structure today, we are going to be taking this also into consideration. Now that reminds me, today being the first day of the month, of the week rather, it's a very good opportunity for you. If you do have any financial asset or instrument you want us to look at, feel free to drop it in the comment section, be it cryptocurrency, commodities, assets, options, or even currency pairs. Let me have them in the comment section, and I will try as much as possible to incorporate it into our plans for today. And in fact, we shall be monitoring that instrument throughout the course of the week. So with that being said here, let's dive right into the economic calendar. And as you will see here, the first for today, Monday, July 31st, there are no high impact event coming in from any of the economic dockets on the watch list that I have. But because today is the first day of the week, it's important that we also take into consideration some medium impact events too as well, as this will give us an insight into what majority in the market are anticipating. Now, when I included the medium impact events, I was able to see 3 events, 2 coming in from the US economic docket and 1 coming in from the Japanese economic docket. So the first one here is coming about in about 2 hours from now, and that is the Chicago Purchasing Managers Index, which is always released by the ISM Chicago Incorporation, and it captures the business conditions across Illinois, Indiana, and Michigan. This index is an indicator of business trend, and it is interrelated with ISM Manufacturing Index. So from this one, a result above 50 is always considered as positive for the US dollar, while anything below 50 is considered to be negative. Now, from the previous data we have here, there is 41.5, and we have a general consensus projecting 43 here. So we are going to be looking forward to what the actual data is going to be today. Then another event is coming in about 7 hours from now, and that is the Loan Officer Survey, which is normally released by the Federal Reserve. And it's a survey of approximately 60 large domestic banks and 24 US branches and agencies of foreign banks. So we are going to be looking forward to that one too. Then lastly, from the Japanese economic docket is the unemployment rate, which comes from the Ministry of Health, Labor and Welfare, and it is published by the Japan Statistic Bureau, and it is a measure of the percentage of unemployed personnel in Japan. So from this one, a high percentage indicates weakness in the labor market, which influences the strength and direction of the Japanese economy. Now, looking at the previous data we have here, it came in at 2.6%, and we have a general consensus of 2.5%. So there is still some hope, there's some positivity in the here there that the unemployment rate would reduce a little bit. So we're going to look forward to that one too as well. So with that being said here, let's dive right into the market structure so that we can look at things from a technical standpoint. So as usual, the first asset on our watch list for this week is of course going to be the US Oil Spot. And on the US Oil Spot, interestingly, I already have 2 positions running in profit here. But before we go into the details into what incited the idea of buying this asset, let's scale up into the higher time frame where I was able to see things from an holistic point of view and use the information there to identify potential trading opportunity. So we are going to be going into the 4 hours time frame this morning. And on the 4 hours time frame, what I did was to take into consideration the nature of price action since the beginning of this month. And it is quite obvious that price action has been very, very bullish. And if you look at the structure closely, you will see that price action has consistently found higher highs and higher lows, which further emphasizes the strength of the buyers in this market. Then I would also like to talk about the fundamental aspect of this market too as well. As you all know that since the beginning of the year, the OPEC Plus members have been trying to artificially increase the demand of US oil, and what their target is $80 baseline for the oil prices. And in order to do this, what they have been doing is to cut oil production. For every seminar they had and meeting, they've been cutting oil production to ensure that there is an increase in demand in the global market. And we're also anticipating the OPEC Plus meeting coming up later this week. That's on Friday. And we want to see how the market is going to be anticipating this event. Are we going to be buying the US oil this week, or are we going to be selling? Now, besides the ascending trend line I was able to spot here after connecting the series of higher lows, I was able to identify a key level which I said we shall be using to guide our trading activity for this week, and that is situated at the $80 mark. Now, if you look at the structure closely, you will see that finally, price action did broke out of that $80 mark for the first time in a long time. And you will notice that this area was a strong selling niche at some point before the breakout of that key level happened last week. And you all know that from a technical standpoint that whenever price action breaks out of a key level such as the $80 mark in this case scenario, we expect that at some point in time price is likely going to come back and retest that structure in anticipation of an uptrend continuation, which appears to be what is going on in the market right now. Now, with this information we've gathered here on the forward time frame, it's important that we know how participants in the market reacted to that key level at the beginning of the week to determine if truly we're going bullish or this could turn out to be a false breakout. So with that being said, I scaled down into the 1 hour time frame, and this was what I was able to come up with. Now, during the early hours of today, while I was trying to dissect this current market structure to determine where price action is likely going to be going, I saw this range where price was confined between the $80.20 level and of course the $79.93 level to give us a flat channel to work with. And you know how we do it in this community. As soon as price action falls into this kind of range, we want to wait patiently for a signal to come, which of course normally comes in form of either a breakdown of the support line or the breakout of the resistance line to give us an opportunity to trade. Now, coupled with that range, we also have this key level which is situated at the $80 mark, and you know how we use our key level in this community. As long as price action remains above the key level, we want to be looking out for structures and patterns that will support the idea of buying an asset. Now, with the situation here, coupled with the fact that price action remained above our key level at the $80 area, it was looking very promising that we are going to be buying the US oil spot. And so in that regard, I positioned myself above the $80.20 level as we saw the breakout retest of that structure to signal my first buy position for the week. And I went on to add more positions at the breakout of the $80.50 level, a level which has been a major determinant of price action since last week, Friday. Now, with this situation here, I have two positions running, and for those who had been privileged enough to identify the setup using these simple parameters we normally use in this community, well done to you for being on standby to have caught that move, as you will currently be running with. On the first position, we have over 80 pips in profit, while the second position is running with close to 50 pips in profit. Now, you know how we do it when price action moves significantly well in our favor. The next thing we want to be doing right now is to ensure that we move our stop losses to secure this current buy position. Now, from what we have right here, I'm of the opinion that anywhere above the $80.50 level seems most appropriate to secure this current buy position while we look out for more opportunities. Now, for those who had missed out on this opportunity, that is, if you had missed out on both the buy positions above the $80.20 and of course the $80.50 area, what will be the plans for today and how do we intend to take advantage of this potential uptrend continuation? Well, so far so good. Price had moved significantly well, and at this juncture it wouldn't make any sense for you to be jumping in front of a moving train. So what you are going to be doing right now is to remain patient, waiting for new structures to emerge to guide our next line of action. Now, there are two ways through which we can take advantage of a potential uptrend if price action truly wants to continue to the upside. Now, one of the situations we are going to be looking at here is considering the breakout of these levels that we witnessed this morning. And we all know from a technical standpoint that whenever price action breaks out of a key structure, such as the $80.50 level and the $80.20 level, as we have seen on this market structure, we are likely going to see some retracement back to test the structure that was broken. It could be the retest of the $80.50 or the $80.20 area, or it could fall between those two levels where the appearance of a reversal pattern, like a double bottom structure, head and shoulder pattern, or whatever reversal pattern you can see there, identify the neckline, then the breakout of that neckline of that reversal pattern will welcome an opportunity to join the uptrend continuation. So for those who had missed out on the buy positions we took advantage this morning, well, you want to remain patient or wait and see if the market will fall back into any of that zone between the $80.50 and the $80.20 area to capitalize on the uptrend continuation. However, if price action does not drop that far and instead it begins to consolidate, then we are likely going to be seeing a situation where price could evolve into a trend continuation pattern, which could come in the form of a pennant, flag pattern, or a bullish rectangle. And if we can identify that pattern, a breakout of the resistance line definitely will welcome the uptrend continuation. So these are the structures we are going to be looking out for to capitalize on an uptrend continuation in this particular market. So as it is right now, the current market structure is still screaming bullish. So we have no other choice than to continue to look out for buying opportunities to capitalize this uptrend continuation. So let's see how the market will play out in the next couple of hours. I'm of the opinion that this momentum still has a potential of finding higher highs. Now, in as much as we're talking about buying the US on spot, you know how we do it in this community, we also want to consider the potential the sellers also have in this particular market. Now, with this situation here, for me personally, before I can consider selling the US on spot, I would rather want to see price action slice through the $80 mark, which of course is our key level for the week. And you know that whenever price action breaks down our key level, we want to be looking out for patterns and structures that will support the idea of selling that asset. Now, if price action breaks down the $80 level, then I could start considering selling the US on spot, but I doubt if this will happen. But if it does happen, we want to also be on standby to catch that move. Then one interesting thing about the breakdown of the key level here is that breakdown of the key level could also share a confluence with that ascending trend line we identified on the higher time frame. And you know this ascending trend line has been supporting the bullish momentum for the last 4 to 5 weeks now. And a breakdown of that trend line could be a signal that the trend line may no longer be able to reject the bearish attempt in the market. So a breakdown retest will welcome selling opportunities in this particular market. So that is what will make me want to sell the US on spot. However, if we are going to consider selling before the breakdown of that area, then we want to see significant bearish patterns such as lower lows and lower highs at some point to start considering selling the US on spot. So let's keep this in mind. Mark these levels out on your charts and let's see how the market will play out from this current area. Now, in addition to what I said so far, I'm already noticing another level here along the $81 area, which of course we can also use to capitalize on the uptrend continuation. So you want to be marking this level out on your chart as you will be needing it as a reference point to guide the next line of action. So at this point in time, hold on a second, let me push this back a little bit. And then, okay, we have something like this. So a breakout retest of the $81 area could welcome more buying opportunities in this market. So let's see how the market will play out going forward. And if you have any questions whatsoever, feel free to let me know in the comment section. And trust me, I'm here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next financial assets. And you can as well use that time to mark out these levels on your charts, as you will be needing them as a reference point to guide your trading activities for today. All right. So, in the absence of no questions, I want to assume that we're on the same page here and all my explanation is well understood. I see your comment 603. Good morning to you. Glad to have you around. 778 and 692 Good morning to you guys, and trust you had a wonderful weekend. I hope I'm faring better with my voice. Remember, I told you earlier that I'm having a sore throat and I'm having a little challenge trying to make myself clear, but I'm trying as much as possible to make my words clear. Please let me know. Give me some feedbacks in the comment section if you can hear me very well, and if you want me to notch up my volume, I will do that to please you guys. All right, so please let me know in the comment section and bear with me for this voice I am having right now. It's very pathetic, you know. All right. So in the absence of no questions, let's move right into the next asset for today. So the next financial assets that we are going to be looking at this morning is going to be the USTech100. And in fact, the USTech100 was a very, very profitable asset for us last week, as we were buying this asset throughout the week, as we had a common demand platform where price action has been finding buying opportunity in this market. If you remember vividly, that 15,350 area was that key point where we've been seeing buy pressure resume in this market, and of course we were able to take advantage of our bullish opportunities around that area. And for those who are part of our profitable journey last week, well done to you guys. Now, in anticipation of the New York session today, how are we planning to position ourselves ahead of the New York session? Now, the first thing I'm doing here is to scale up into the 4 hours time frame, where I was able to identify. Hold on a second. I think it's the daily time frame. Yes, it's the daily time frame. So I started from the daily time frame to identify what is really going on in this market, trying to understand the nature of price action, at least since the beginning of this year. And if you have been with us in this community since the beginning of the year, you would remember that this we have been buying the USTech100, taking advantage of higher highs, higher lows in this market to capitalize on that bullish move. Now, you could look at the structure. I was able to identify a couple of trend lines. In fact, I have 3 trend lines here, where the major trend line is this thick one on your screen right here, after which we saw the deviation from that ascending trend line happened in the month of March. Then we saw this one right here. Then again, we witnessed another deviation which started in the month of April. And in fact, that is the trend line we have been using to support this bullish momentum in the last couple of months now, and which of course is going to be one of the parameters we are going to be using to guide our trading activity for this week. Now, with that being said here, things became a little bit more interesting during the second half of this month, after which you will see how the 15,350, which was a barrier for buyers at some point in the month of June, we saw how that level was broken to the upside during the second week of this month to give us a signal that buyers are getting stronger in this particular market. Now, with this scenario here, as usual, whenever we have a breakout of a key structure, such as this one we have here, we expect a retracement back into the structure where the continued buy pressure around that area would incite an uptrend continuation. Remember, this was our platform for buying opportunity last week as we saw continued retest of the 15,350 level. Now, with this situation here, the question is this uptrend that we've witnessed so far going to continue in such a way that it will lead to the breakout of the 15,950, or are we going to witness a situation where this range that we saw here, remember price action has been caught within this range in the last couple of weeks now, could break down to the downside to incite a sell-off where we might be looking at any of this ascending trend line as our TP target for any sell-off that happens in this market. Now, to answer this question, we would need to take a further dissection of the lower time frame where we want to see how participant in the market is reacting to the structure. And I think I was able to identify something on the 4 hours time frame. Okay, nothing here yet. So we just need to scale down into our, hold on a second, I need to include this trend line as this is going to be a major determinant of price action for this week. This trend line here is going to be a major one. So let's scale back down into the 1 hour time frame, and here we go, right on the 1 hour time frame. And this was what I was able to spot this morning while trying to dissect what the market participants are trying to do using the trails they left behind on the chart. Now, if you look at how the week has started here, you will see that the week started on a strong bearish note as we saw price action started the week at around the 15,810 level, which happens to be the highest point for this week as we saw this impulsive bearish move bringing price into that 15,690 level. Now, with this situation here, we have a range where price action is currently playing at or trading at this point in time. And in fact, you know how we do it in this community when we have this kind of flat channel. What we want to be doing here is to wait for either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. However, there's something interesting going on in this market since price action tested that 15,690, which happens to be our support line for this week. Now, one thing that has happened here is that we have been noticing some higher lows here, giving us a clue that a bullish momentum is gradually building up behind the scenes for this week, which of course we want to be part of. Now, how do we capitalize on this move? Well, within this channel already, if we can capitalize on a bullish opportunity, that means we can be part of a bullish move even before the breakout of the 15,810 level happens, after which we can maximize the potential of scooping in more profits on this single move. Now, when we identify higher lows, the next second thing we do is to connect the series of higher lows so that we can have a trend line to work with for the week. Now, to connect the series of higher lows, we need our line chart, which of course will give us the privilege of having specific points of connection. So we already have a trend line, which of course we are going to be using to guide our trading activity for this week. Now, I would like to thicken this a little bit so that we can emphasize its importance based on this current market structure. So do some little adjustment so that we can capture the pivot lows in this market. Then in addition to the ascending trend line is this level here, which of course has been a major determinant of price action since the early hours of today, and that is the 15,750 level. So I will give this a different color. Let's give it a wine color to differentiate its importance and even differentiate it from the support and resistance level of this channel. So we have the 15,750. So you want to be marking out this level on your chart, as we are going to be needing it to guide our trading activities for today. So let's give it a wine color. All right. So let's go back into the chart. So what we are going to be doing here is very, very simple. So we have two parameters now that we are going to be using. In fact, we have three parameters we are going to be using to guide a bullish momentum here. And one of the parameters here is the 15,750, where I want to see price action break out, retest that level to give me an opportunity to buy. Then secondly, we have this ascending trend line, which of course we just identified now. So what this simply means is that as long as price action remains above the ascending trend line, we shall feel comfortable in our buy position, while we also look out for more opportunities to buy. Then thirdly, we have this resistance line, which happens to be the highest point where price action has been for this week, where a further breakout of this level will welcome more opportunities to capitalize on this potential uptrend. So that is how we are going to be capitalizing on any bullish momentum on the USTech100. So for the sake of clarity, let me give a visual representation of what I'm talking about. So I want to see a breakout happen. So you scale down to your lower time frame as soon as the breakout happen. Look out for retest of structure confirming that sellers are finding it difficult to drop below the ascending trend line. And this, of course, will reflect on the chart as continued buy pressure above or around the 15,750, where we want to join a bullish move, and a further breakout of the 15,810 level will welcome more opportunities to buy the USTech100. So that is how we are going to be buying the USTech100, at least for the first half of this week. Now, in as much as we're looking out for buying opportunities, you know how we do it in this community. We also want to keep tabs with the potentials the sellers also have in this particular market. Now, if we are going to consider selling at this point in time, remember I told you that we have a range where price action has been trapped within at this point in time, and I told you that we only need a breakdown of that support line to give us a signal that we are likely going bearish. And in fact, I would appreciate a retest of structure to give me confirmations that sellers are going to be dictating the pace going forward. Now, with this situation here, I'm of the opinion that we can actually capitalize on a bearish move even before the breakdown of that support line at the 15,690 happen. And how are we going to do that? Now, remember, we have an ascending trend line which we identified earlier, which is supporting this bullish momentum since the beginning of this week. Now, if we are going to be joining a bearish momentum even before the breakdown of that support line at the 15,690 happens, we want to see price action break down that ascending trend line, where a retest of that structure like the ascending and the 15,750 happens. Then at this point, we want to see signs that buyers are finding it difficult to climb back above this 15,750, which would give us the signal we need to join a bearish move. And if we can join at that point, then a sell stop order below the 15,690 will be a beautiful opportunity to maximize the potential of this bearish move. Then we can be aiming at any of the ascending trend lines we identified on the higher time frame as our TB target for the sell position. So that is how we are going to be anticipating either a buy or sell position on the USTech100. So you want to be marking out these very important levels, as this is where our center of focus is going to be for today. So if you have any questions regarding this current setup in any way, feel free to let me know in the comment section. As usual, I will be taking the next 10 to 15 seconds to see if there are any questions, and you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point when you're about to make your independent trading decisions. All right. Okay, I see some comments. I see comment from Nadir. Okay, good morning. I see 80913. Good morning to you too. Dark 2 and Nest 57. Very beautiful morning to you, and I trust you had a wonderful and beautiful weekend out there. So, in the absence of no questions, I want to assume that we're on the same page, and I want to assume that my voice is still manageable when it comes to hearing me clearly. So, with that being said, here we shall be moving right into the next assets for today. So the next financial asset for today is the GBPUSD, and in fact, it has been quite an interesting first 12 hours of the week here as we see price action caught within a range, further emphasizing the level of indecision at this particular point in time. But before we go into the details of what we are looking at for today, let's run through the higher time frame so that we can both have an holistic perspective into what is going on in the market from the higher time frame, and of course we can look out for correlations between the higher time frame and the lower time frame to identify potential trading opportunities. So the first thing I did here on the GBPUSD was to go into the higher time frame while I was trying to identify potential trading opportunities for this week. And on the higher time frame here, I was able to take into consideration the nature of price action since the month of March of this year. In fact, since the beginning of this year, price action has been very, very bullish, finding higher lows and higher highs consistently. And in order to buttress the strength of the buyers here, we connected a series of higher lows, giving us a couple of trend lines, which of course has been supporting this bullish momentum. Now, if we zoom things in a little bit and taking into consideration the nature of price action since the month of June, you will see that we have a key level to look out for this week at the 1.28500 level. In fact, this is a strong psychological area considering the round figure of that price. Now, that key level at the 1.285 has been a major determinant of price action, of course. Since last month's trading session, you will see here we saw selling pressure around this area at some point, negating all attempt by the buyers to break through that structure. We saw another one here. And not until the second week of this month, we finally saw the breakout of that key level at the 1.285. Giving us a sign that we are likely going to the upside. And the fundamental aspect of this market is the fact that the inflation rate in the UK is on an astronomical high. And to combat this inflation, the UK has also adopted the interest rate hike saga, which of course the pound at this moment in time has the highest interest rate so far amongst the major global markets. And because of this high range, of course, this will give us a higher yield, and investors have been putting their money on the pound sterling because of this higher yield in return compared to the US dollar. And as a result of this, we have consistently seen higher lows in the last couple of months. Now, from a technical standpoint, when price action breaks out of a key structure such as this one right here at the 1.285, we expect that some point in time price is likely going to come back into that structure to retest it to incite another wave of bullish momentum. Now, if we take a closer look at what has been going on here in the last 1 week, you will see that as soon as price action came into the 1.285, we have been noticing buy pressure around this area to give us a clue into a potential uptrend continuation. But we are not going to be jumping into conclusion at this point, as we will still need some further confirmation that truly buyers are here to stay. Now, in addition to the key level, one interesting thing about this structure is the fact that it also shares a confluence with one of the ascending trend lines we identified earlier. Now, the question going into the week is, will price action respect the ascending trend line one more time to incite an uptrend continuation, or are we going to be seeing a breakdown of the ascending trend line, retest of structure to incite a sell-off in this market? And remember, we are looking forward to the Bank of England's interest rate decision, which is coming up in about 2 days from now, and the majority of participants in the market are projecting that there is likely going to be an interest rate hike. And if the sentiment for interest rate hike is higher, then there is a tendency we might likely be seeing a bullish momentum prior to this event. So in order to have a better perspective from a technical standpoint, I went on to scale down into the 4 hours time frame where I noticed this accumulation zone, which of course you would notice here that since the second week of this month, despite the strong bearish momentum since price tested the high at the 1.313, we saw that as soon as price got into these areas, we saw how sellers struggled to break through this area. So at every point in time sellers tried to break through, we saw how buyers came in to negate the seller's attempt. The same thing also happened a couple of weeks ago, and in fact we saw what happened on Friday too, as well, as we saw another buy pressure just exactly above that ascending trend line to push price to the upside. Now, to guide our trading activity for this week, remember we have our key level at the 1.285. So what we want to do right now is to see how the market participants are going to be reacting to this key level at the 1.285 to decide what our next line of action will be. Now, remember, we are within above an accumulation zone, and for me personally, it will make quite a whole lot of sense that we look out for buying opportunities as long as price action remains above this zone. And the only thing that will make me want to consider selling is for price action to take out all the buyers at this point, where a retest of structure will give us further confirmation to join the bearish move to the downside. And if this does not happen, I don't think it makes sense selling above the accumulation zone. But we might see a significant setup that will make us join even before the breakdown happens. So to be able to identify that, we shall be scaling down into the 1 hour time frame where we want to see our participant in the market is reacting or responding or relating, let me use that word, to that key level at the 1.285. Now, scaling down into the 1 hour time frame, we'll begin to see things very, very clearly. So this morning, while I was trying to project what could happen around this area, I was able to identify a range between the 1.286 and the 1.28450, where we have noticed continued trading activity within that range. So sellers and buyers have been struggling here, trying to send a signal for the week. And you know how we do it in this community. When price action falls into this kind of range, we want to remain patient to wait for a signal to come, either in the form of a breakout or breakdown of the structure. And for me personally, considering the fact that price action is sitting above a very strong accumulation phase, it's quite reasonable to look out for buying opportunity. And to take advantage of a bullish momentum here, you would want to see price action break out of the 1.286, as there is a high chance that the bullish momentum could come in since price still remains above that accumulation phase. And with the situation here, I already have a price stop order triggered at this point. Initially, I had one earlier, which was stopped out in a loss, unfortunately for me. But at this point in time, we have another buy position triggered. So let's see how this buy position will move. Now, for those who took advantage of this one, well done to you for being on standby to catch that one. Ensure you have your stop losses. Very, very important. Whatever position you make in the market, you always want to leave some level of doubt that price might go the other way. So you did want to have your stop losses placed. And I'm of the opinion that anywhere below the 1.28450 should be enough for a stop loss to sit. As of course, you want to give enough room to capture this whole range, give enough room for price action to breathe around that area. And this will be dovetailing to between 15 to 18 pips stop loss on this current position. So at this point in time, let's see how the market will play out from this area. So anywhere above the 1.286 looks promising to join a bullish momentum in this particular market. Now, in as much as we're looking out for buying opportunity, you know how we do it here. We always want to consider the potentials of sellers too as well. Now, with this situation that we have a flat range, of course, a breakdown should be welcome in selling opportunity. But in this case scenario, price is sitting above that very strong accumulation zone we identified earlier. So if we are going to be selling at the breakdown of the 1.2850, indeed we will need a significant confirmation that sellers are indeed going to be dictating the pace going forward. So what we are going to be looking out for to sell, we are not having a sell stop order in this case scenario, as we want to see price action first of all take out all the buy positions at this juncture. Remember, we are still above an accumulation phase, so we need to be very, very careful. So once we sight the breakdown of this 1.28450, we want to scale down into a lower time frame to see signs that buyers are finding it difficult to climb back above the 1.2845. And this, of course, will reflect on the chart as a retest of the support line that was broken. Multiple selling pressure on this area then will give us opportunity to join the bearish move. Now, if we sell at this point, please note that you want to be on standby, you want to be around. So as soon as price action moves significantly well, you want to be moving your stop losses accordingly to lock in that profit. Remember, we are still within a very strong accumulation zone where buying opportunity is more reasonable at this point. So if we sell around this area, ensure that you are around, move your stop losses accordingly, secure your positions as soon as price action moves significantly in our favor. So it's quite a simple setup we have here on the GBPUSD. If you have any questions whatsoever, feel free to let me know. And you want to indeed mark out this level as our center of focus is basically between the 1.286 and the 1.28450, at least for the first half of this week. So I'll be taking the next 10 to 15 seconds to see if there are any questions before we move into the last financial asset for this week. All right, so I see some comments here. I saw Rajen Drapres. I hope I pronounced your name correctly. Good morning to you. Susie MB, good morning. And Ramona85, good morning to you and glad to have you around. So in the absence of no questions, I want to assume that we're on the same page. Hope you've marked out these levels on your chart, as you will really need them as a reference point to guide your trading activities for today. So with that being said, here we shall be moving right into the last instrument for today. So the last instrument on my watch list for today is the XAUUSD, and it appears I already have a buy position triggered at this point. And before we go into that detail, let's run through this market from an holistic perspective. Let's see what is going on in the market on the higher time frame. Now, what did I do here? I think I started from the daily time frame. Let's see what we have. Okay, I think it's from the daily time frame I started the analysis on this asset. Now, on the daily time frame, what I did here was to take into consideration the nature of price action since the last quarter of last year. So that was around September, October, November of last year. So I took that into consideration. And if you look at what is happening here, you will see that price action has consistently found higher highs and higher lows in this market. And to buttress the strength of the buyers in the last, how many months now? That's about close to 10, 11 months right now. You will have a couple of ascending trend line, as you will see on your screen right now. However, that is not the most important area we are going to be focusing today. as I want us to look at what has been going on here in the last 3 to 4 months. Now, we saw this impulsive move that started in the month of March, which led price to the highest point gold will be for this year, which was at the $2,078 level. And we saw that as soon as price action tested that zone, we saw price begin to nosedive and finding lower lows and lower highs along the line. And in the last, since the month of May, June, July, in the last 2 months, we've seen lower lows and lower highs in this particular market, where price appeared to have culminated into a range between the 1,980, as you will see here, and the 1,900, which has been serving as a strong platform for buying power. And for the fact that price action falls within that range, it's quite clear that there has been an indecision in this market. The gold has been a very strong safe haven, and for the fact that the dollar too has been witnessing rate hikes lately, majority have been investing in the dollar too as well. But there is a dilemma right now, as we don't know where price action is going. And if we look at the fundamental factor too as well, coupled with the positive economic data that came in from the US last week. Remember, we had a GDP data which came extremely well, giving us a clue into revealing a 2.4% expansion in the US economy last month. This is a very good sign that the US economy is growing. And as a result of this high data from the GDP is a red flag that the Fed will likely be increasing interest rate one more time. And because of this anticipation, majority are considering to buy more of the XAUUSD of the dollar. Now remember, we have a couple of high impact events for this week for the dollar. Let's look at it together here. So we have a lot of high impact events from the US. We have the ISM manufacturing PMI, which comes up tomorrow. We have the hold on a second. We have the ISM services PMI. We have the average hourly earnings on Friday, and of course we have the non-farm payroll, which is one of the key events for this week, which is coming up later in the week. And because of this event, I think participants are looking forward to this event to decide if truly we are going to be putting our money on the XAUUSD, so on the US dollar. So let's go back into the chart from a technical standpoint here. Now, since price action tested the highest point here, we have noticed that we are within a descending channel. As you will see, price action has found lower lows and lower highs here, giving us a descending channel to work with ahead of this week. Now, the question going into this week is that will this descending channel be respected one more time? That is, price would find selling pressure again along the resistance line of the descending channel to bring price back into the support line of the channel, which of course shares a confluence with that ascending trend line we identified earlier. So that is one scenario there, and if that is going to be the case, we might likely be seeing about a minimum of 500 to a maximum of about 1,000 pips to catch here if price action drops significantly to the downside. And in fact, if you look at that 1,980 area, you will notice that buyers have been finding it difficult to break out of that structure. Look at the first attempt here 2 weeks ago, and in fact last week, following prior to the GDP data, we saw attempt by the buyers to break above that area, but it failed at every point in time, pushing price to the downside. And in fact, from a technical standpoint, it is giving us a sign that we might likely be seeing a bearish move to the downside. However, we cannot ignore the potentials of buyers too as well, where a breakout of the 1,980 will welcome buying opportunity. And of course, if you look at the structure closely, a breakout of the 1,980 would also break out of the resistance line of that descending channel, which could be a sign that the resistance is no longer strong enough to resist the buy pressure in the market. So for us to have a better perspective into this, I think I scaled down into the 4 hours time frame, where I was able to identify a key level which I think we can use to guide our trading activity for this week. And the key level falls at exactly the 1,960 level. And for those who had been with us on the XAUUSD for over a year now, you will have observed how the 1,960 have always been a major determinant of price action in the gold market. Now, let us not go to that far here. Let's just go to as far as the beginning of this month. Now, we saw around the 1,960 here. We saw selling pressure. We saw price break out of the structure here. Price retested it. We saw some consolidation phase happen around here before we finally saw the breakdown of the structure following the GDP data yesterday. Now, attempts by the buyers to break out of the structure again during the second half of last week failed at every point in time, as we saw sharp rejections of the 1,960, giving us shooting star candles, which from a technical standpoint is a sign that reveals the presence of sellers at this juncture in the market. Now, the question here is, are we going to see a situation where the impulsive move we saw here will lead into a retracement that will incite a trend continuation to the downside? That is one scenario we are looking at. And then the other potential opportunity here is, will price action transition into a double bottom structure where the 1,960 will serve as a neckline of that reversal pattern, where the breakout of the 1,960 will confirm an uptrend continuation. So these are the scenarios we are going to be looking at. So in order to project a trading idea for today, we want to see how participant in this market has been relating to that area around the 1,960 since the beginning of this new week. And to do that, we want to scale down into the 1 hour time frame, where I already identified a simple setup that we are going to be using to guide our trading activities for today. Now, if you look at this setup here, since the beginning of this week, though price action started with a very strong bearish note, as you will see, price started at around the 1,960, and since that moment, we've been seeing lower lows and lower highs. But as soon as price action got into that support zone at the $1,953.40 level, we have been noticing buy pressure around that area, hereby negating all attempt by the sellers to break through that structure. Now, in addition to that one is this ascending trend line, which I was able to spot here after connecting the series of higher lows. Then in addition to this one too as well is a descending trend line, which captured the lower highs we've been witnessing here since last week Friday. And of course, a breakout of that descending trend line will confirm that this ascending trend line we have here could be a platform for another wave of bullish momentum for this week. And as a result of these levels I identify, of these structures I identify here, I positioned myself just right above the $1,956.50 level, because I knew that if price gets to this point, price would have taken out this descending trend line to give us signs that buyers are gradually gaining momentum. So with my buy stop order above that area, I already have a buy position running. And for those who took advantage of this move above the 1,956, well done to you, as you will currently be running with about 20 pips in profit at this point. Now, for those who had missed out on this opportunity, it's okay. The week is still very early, and there are still chances that we can capture more opportunities. And in fact, a breakout of the 1,956 does not really mean that this week is going to be bullish, as we're still monitoring and ensuring that we are on the same page with the market. Now, in as much as this has happened here, if you had missed out on that one, we could still see if the market will come back at some point, from a technical standpoint. Whenever we have a breakout of key levels or key structures such as this one, we have the breakout of the descending trend line. Then secondly, we have the breakout of the 1,956 level, which could be considered as the neckline of this reversal pattern we have here. So from a technical standpoint, when we see a breakout of such structures, we expect that at some point in time, price may likely come back to retest it or retest this one, where the appearance of buy pressure or reversal patterns on our lower time frame coincide an uptrend continuation. Then in this case scenario, a further breakout of this resistant level at the $1,960.40 level will definitely welcome more opportunities to maximize the potential of this uptrend continuation. So this is how I'm going to be buying the XAUUSD for today. So the platform for buying power here is above the $1,956.50 level. Then you could have your stop loss sitting anywhere below the 1,953, which will be dovetailing to about 30 to 38 pips, a stop loss on this single move. So that is how we are going to be buying the XAUUSD for today. However, if we are going to be considering selling the XAUUSD, I would rather want to see price action slice through that support line at the 1,953. And one interesting thing about the breakdown of that support line here is that, first of all, price would have broken down the ascending trend line, which of course has been supporting this bullish momentum here. Then a breakdown there will give us a sign that the trend line may no longer have the capacity to continue to negate the bearish momentum. Then secondly, in addition to that one is this descending trend line, where if price action drops below this trend line, then of course we are going to be back within the seller's territory. Now, retest of structure at some point will welcome more opportunities to join a bearish move. But at this point in time, I doubt if that will happen. But if it does happen, we want to be on standby to catch that move. So at this point in time, our center of focus is between the zone. So it's a very simple setup we have here on the XAUUSD. So you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your trading activities for today. So these are my views here. And if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before I draw the curtain for today. I see all your comments. 454. Well done to you. All right. So in the absence of no questions, I want to assume that we are on the same page. And it's on this note I want to call it a day. It has been a wonderful moment. Unfortunately, I have a sore throat, and I hope that before tomorrow things will get a little bit better. But I hope I was able to do justice using my voice in this manner to express myself to you all. I hope you are able to relate with me along the line. So on this note, I want to wish you all best of luck during the New York session today. Please allow your setups to mature before you want to be jumping into any position. And I'm very sure we are well equipped. I'm very confident we are well equipped to be able to take advantage of any potential trading opportunities today. So we treated 4 financial assets today. We treated the USOILSPOT. We looked at the GBPUSD. We looked at the USTech100, which is popularly known as the Nasdaq. And of course, we look at the XAUUSD, which is popularly known as the gold spot. So we were able to identify very simple setups that we can easily use to navigate our trading decisions for today. So once again, I wish you best of luck. And for those who are joining us for the first time, I hope you are able to gain 1 or 2 things from what we discussed here. And I look forward to seeing you same time tomorrow. The more time you spend with us, the better you get to understand how this works and eventually use the information you have gathered here to make your own independent decision. Thank you very much for being around with me. I'm grateful, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well this asset has been doing so far, while we also position ourselves for the first trading day of the new month of August. Do have a wonderful evening, everyone. Bye-bye.